Joining me now is Brendan Yurik. He's the CEO of ELECTRIC Royalties. Great to see you again, Brendan.
Great to see you as well, Mark. Thanks for having me back on.
For sure. It'll be nice to get an update here on some of the latest developments. Before you do that, if you could just refresh everybody, give us a reminder of the company's long-term strategy of having a diversified portfolio across 9 clean energy metals.
Yeah, so a couple key things to our company. One is that we are a royalty company. So we acquire royalties on assets, which means that we don't have to put up any of the development costs, any of the capital costs to develop these, move them forward. We're essentially buying right to the cash flows from these mines once in production. And the second part of that would be to use royalties as a way to invest in the clean energy metal space. And when we look at what are clean energy metals, the 21st century has a whole bunch of different new demands that require more copper, more zinc, more nickel, more graphite, tin, vanadium, manganese, all of these different metals, whether it's from renewable energy, energy storage, electric vehicles. The entire world is moving towards needing a lot more of these metals moving forward. So our plan was to basically go out and acquire royalties on those assets in North America, Europe, and Australia that could be domestic sources of supply for these metals. And that's what we've been doing. And we're up to 43 royalties now in our portfolio.
All right, very good. Now, some of the recent news includes Eric Sprott providing $2 million in funding for the company's flagship manganese royalty project in New Brunswick. Tell us about the support you're getting there and some of the details here and what you're going to do with that money.
Yeah, well, that's fantastic. So that's going to basically complete a PFS on the Battery Hill project, which is a major royalty for us. The PEA had about 47-year mine life on it. It's one of really the only manganese deposit in Canada that will be ready to be for the EV space. And if you look at the cash flows on that project, I mean, they're forecasting average over 47 years is somewhere around US 177 million. And so we have a 2% gross revenue royalty. So we'd be entitled to 2% of those revenues annually once in production. So that's a big one for us. I think that royalty alone makes us look really grossly undervalued where we're at today. I mean, that's one of 43 royalties in our portfolio. I just gave you the numbers. You can do the math on that. But the royalty cash flows from that alone, make us look quite undervalued at these prices today.
Right. We'll get to the valuation on the stock in just a moment. You wrote a letter to shareholders, which we want to hear about. Now, another big development, Export Development Canada. They have basically signed a letter of intent for $100 million in financing for the flagship lithium royalty asset in Ontario. So that sounds like big news. So tell us more about that if you could.
Yeah, I'm pretty impressed with the Ontario government. They've done quite a few initiatives, I'd say, in the last year that have really been supportive of the clean energy metal space. And so this is the first time I've seen them recently do this type of financing, especially this early on. The feasibility is due out on that project in the next 12 months or so. But typically you'd have the feasibility out. But that's a great show of support from the Canadian government for project financing. Seymour Lake, that's another project we hold a royalty on. That's the project that's getting that money. And, that will be the first lithium mine to go in production in Ontario. So from all accounts, looking at it so far. So, very supportive. Again, that'd be a very big royalty for us as well. And so great to see this, happening on the development aspect of our royalties.
We've talked before, Brendan, about Gleeson and Sons, led by Stefan Gleeson, who is a board member, also the largest shareholder. And this arrangement, this $10 million convertible credit facility. Can you sort of just remind our viewers of the significance of that and that support for Mr. Gleeson?
Yeah, for sure. So Stefan Gleeson, he's close to about 30% ownership in the company now. And alongside my family extended, who's about 18%. We're both on the board. So just between the two of us, that's kind of half the company represented. So he basically put together this facility for us, which let us go out and do deals over the last, 3 years, basically, without us having to raise equity. And it's a one-of-a-kind facility. We don't owe any payments on this until January 2028. So that's, basically 3 years from today. No interest payments, no capital repayments. It's all convertible into shares at a much higher share price. There's no early repayment fee. And so definitely something that very favorable. And the only kind of acquisition financing you get if it's from your, largest shareholder. So, we've used that pretty well over the last, 3 years, growing the portfolio. And, like I said, I think, no payments owed on that for another 3 years. So, it's been very, very lucky for us to be able to do that in this market. And we just drew down the remainder of that to basically close out a cash flowing royalty in Chile, a copper gold producing royalty. And so, it's been very helpful to have, over the last 3 years.
Back to the valuation of Electric Royalties shares. Most CEOs think their stock is undervalued. You went a step further and sent a letter to shareholders explaining why. And as we know, sometimes certain stories, it takes the market, it takes investors a while to get their heads around it, to catch up to it. So give us some of the details that you elaborated on in that letter.
Yeah. So, let's just start with the fact that we're pretty much down about 50% since December. And what's happened since then? Well, that 100 million LOI for the Seymour Lake lithium project came out in December. We had Eric Sprott fund our Battery Hill royalty through PFS. So it's a major royalty, a great milestone for us. And we closed out a producing copper gold royalty in Chile. And we completed an equity raise, which was 80% done by insiders. About $1 million of that was my family alone. And so all great things. And copper prices are going up, gold prices are going up, and we're down 50% over that time period. So it's tough to see. I think we have a ton of different catalysts this year. We've got this new producing royalty, and we still have some payments coming from our lithium option portfolio. And we have 4 different royalties, 3 of which have been in production previously, which could enter back into production this year. So 4 different royalties in our portfolio, which have the potential to enter production over the next 12 months. And we've got feasibilities and pre-feasibility studies coming out on another 5 or 6 assets this year. And so you're seeing incredible growth in our development portfolio, and you should see some upside in our immediate cash flow profile as well. And so you see all of that stuff, and you see where we're trading at today. I think, our market cap, last I checked, was around 13, 14, enterprise value about 25. And so, trading at a deep discount today. And like I said, 50% down on the year, despite lots of good news that's come out. So, definitely a good buying opportunity for investors to get into our stock or to, double down on us now.
Lastly, Brendan, and continuing on that theme, we know that short term, there are a lot of concerns in the marketplace because of what's happening in the United States. But your strategy is long term. You're looking out a couple of decades. So if you can sort of summarize the value proposition, maybe let investors know that, short term things are a bit choppy, but you're playing the long game here.
Sure. So I would never want to lead investors on to think that this is going to be a 2-decade investment, for sure. Because that's, but definitely, we have been playing the long game. And so, a lot of the royalties that we acquired, when they were at the historic resource stage. So, Seymour Lake would be a great example of that. We acquired it. They've raised 70 million since then. They doubled the resource. They put out a PEA. They have an FS coming. And so, we played the long-term strategy. And a lot of those long-term bets are now coming into feasibility and about to come into cash flow. And so that's, we have been playing that for the last 5 years. And that should really pay off for us, over the next kind of 2-3 years here as some of these bigger development projects come into production. And so, we do see this as a, 2 decades opportunity. I think, metal prices are definitely going to keep rising, across most of our targeted metals. I think copper, for example, is great. Great metal for this year, next year, and, the foreseeable future, and something that we definitely are, sinking our teeth into more and more. I think, you look at these where we've got royalties on the very few projects in safe jurisdictions that could actually domestically supply these metals, and demand, isn't going anywhere anytime soon. So, tremendous opportunity to be buying in, at this prices where we are today, much lower than we are when we went public about 5 years ago. So, definitely an incredible buying opportunity.
All right. Lots of potential catalysts the next several months. We appreciate your update today, and we'll be following, and we'll talk to you soon.
Thanks, Mark. I appreciate it.
All right. Thanks again. Brendan Yurik, CEO of Electric Royalties. Thanks very much for joining us, and we'll talk to you next time.